Okay, hello everyone. Thank you for joining this Natixis joint research seminar between the European team and also which is the global team and also the Asia team. So today, I think we have a very interesting topic in front of us, especially we all know that yesterday China actually placed the import ban, or basically like a regulation to stop its government in buying Micron chips in terms of its critical infrastructure. And of course, a lot has also happened way before that, and this is just an example of what we are seeing in this geopolitical trend. So today, we are quite glad that we have Alicia, García, Herrero, which is the chief economist for Asia Pacific, which will be joining us shortly in analyzing the geopolitical situation in this chip industry. And I'm Gary, a senior economist for Asia Pacific, specializing in thematic research. And we also have Eric Binoris, which is a sectorial specialist in tech and data, that he can take you into a very deep dive into analyzing what will actually happen if we end up in a kind of a polarized world in two different supply chains. So with that, I think let's start with the key topics that we want to focus today. And on top of what is the basically what will happen to China, what will happen to the world, and what will happen to the whole semiconductor industry, the first thing we really need to know is what is happening from the geopolitical perspective. And of course, if we look at the timeline that you would see in front of you, a lot of this has actually happened way ahead of whatever chip war that we are talking about. Because since 2019, after the US President Trump actually came into power, we already see there are different type of bans on China's different tech company. We all know the case of Huawei. Before that, we have ZTE, and increasingly, this list has been expanded to more and more firms, not only from export ban, but also from whether there's any restriction on U.S. companies on whether they can actually invest in these firms. And of course, recently, we also see a very big shift, which is also a major change, because it's no longer only a US-led chip ban. It began to reach the stage that the US is asking its airlines to join in on this tech. So I think the key question we have here is, of course, it's very clear what is happening, but what is not so clear is that why is this happening? So I think if we look at it from the US perspective, we know that if we look at the sanctions on Huawei and also its subsidiary, which is HiSilicon, which is a fabless design chip firm, the impact from sanctions is enormous. You see that in HiSilicon, it was really reaching the top 10 fabless firms a few years ago. However, because of this impact of the sanction, it already dropped out of the top 10. We don't really know how much revenue or profit they make in 2022, but it's hard to imagine that it's better than 2021. So it means like an 80% drop in some of this company. Huawei may be in a slightly better situation, but still we see there's a very sharp drop in revenue comparing to the peak in 2020. And of course, the other reason is also about part of this sanctions actually may not be as effective as people may have imagined. Because if you look at the share of the global fabrication capacity by foundry, there are of course different ways of measuring it, but here we're using the 200 milliliters wafer equivalent. We see that China already gained around 25% of this production capacity. Not everything is owned by Chinese firms in China, because some are actually belongs to foreign firms. But still, if we look at it from the geographical perspective, a quarter of this capacity actually now situated in China right now. And of course, this is really where we stand. At the same time, we also see that under the current rules, actually China still managed to import certain type of equipment or different type of products from the US, even though this approval rate has declined over years because the rules has been tightened. The US basically didn't approve this type of product sales to China. but still, we actually see that there is a slight rebound recently, even the total value hasn't really increased. So where did this really fit the purpose of the US administration? I think this is really why they want to expand this restriction in terms of this the coverage that we are seeing right now. So after talking about the reason of why the US would want to expand, and of course, we also need to look at what has been expanded. So for long, it's very hard for China to buy any equipment that assists production in anything below 7 nanometers because they belong to the category of EUV, which is right now the most advanced equipment in the world in terms of the lithography equipment. However, whether the US want to restrict China to 7 only, or it want to expand a bit further because a lot of other chips are also used in other categories such as AI and etc., which we will show a chart in a minute about, you know, the basically the general usage of different type of chips. But basically, the short message here is that the US is not satisfied of restricting China at the 7 nanometers level. It needs to reach certain basically a bit more to 16. However, this may actually extend the impact to 45 because many of this equipment can actually be used in for multiple purpose, even for some larger chips. So with this key point here, it also brings in the question on the US cannot really make a very meaningful impact alone because of course US is still one of the biggest equipment manufacturer in the chip industry. There's no question about that. But without the collaboration with the Netherlands and Japan, which are actually by far more advanced in terms of producing this sort of equipment for the world, then a lot of this US policy may not be that effective after all. As we can see here, of course, I think the common example that appear on news all the time is really ASML. But in the case of Japan, we also see other companies such as Nikon and Canon. They're also quite a large player in producing different types of machines here. And of course, if China is able to purchase these machines from all these companies, then everything the US may have done may not be, you know, that useful. And after talking about this general effectiveness or the coverage of what the US has been doing, but we also need to acknowledge that it's not only about the US because the world has also stepped up its industrial policy. We are really in this new era of basically seeing a lot of countries trying to, or market actually trying to pour different size of the subsidies or money into the chip industry just to bring the production back to the land, or at least to the France, which is in the trend of friendshoring. So we see that in the US, the CHIP Act has been quite basically strong initiative, not only about the money, but also about the consequence that if the company actually get the subsidies, it's barred from expanding in China for a certain type or level of technology for a certain period of time. And we also have that in Europe because, I mean, it's probably a bit similar to what the US is doing, but still it's really about injecting more money to bring this type of more advanced chip production back to their own land, just in case that if there is any supply chain or national or supply chain security concern in the future, then this is really what the government or the policymakers are doing right now. Of course, whether it is effective or not in the long run, it is a very difficult question that I will leave it to Eric to answer in the future. But at least if we are at least look at it from the shorter term perspective, there will be impact on China, on basically on the world, and also generally basically in the whole chip industry, and even for the impact to the supply chain as well. Because we all know that in most of the electronics that we use nowadays, whether it's advanced or not, it still contains certain type of chips element there. So let's look at the impact. So if we first look at China, indeed, I think chips has become a very hot topic that we have seen, well, in the past at least decade. Of course, it has become even more important from the policy-making point of view because we all heard of Made in China 2025, and there's another standard called China Standard 2035, and also about this goal of achieving self-sufficiency. So China is really pushing quite hard to achieve or basically try to climb the tech ladder. And the reason is that if you look at the import of key goods in China, we see that semiconductor already exceeded crude oil since 2015. And so I think China on foreign countries, this is really the biggest economic factor beyond that it will want to produce its own chips. However, whether China is fully insulated from the sanctions or whether purely government money can solve every problem, maybe not. Because right now, if we measure it by revenue, we still see that foreign firms supply 86% of China's chip-making equipment as of 2022. And by far, US is really the biggest provider, followed by, if you see in the chart, followed by Japan and also Europe as well. And of course, China has also made some progress. However, we are really talking about a market share of around 10% domestically right now. So yes, indeed, it seems that the policy is effective in a certain way, but at the same time, it seems that there's still a long way to go in terms of for China to catch up with the world. And especially if we look at some of this critical manufacturing equipment, the share of Chinese firms in its domestic market is actually quite low, because if we are talking about lithography, it's really close to 0% if we really look at the more advanced one. And for some of the other processes, such as deposition or etching, is barely around 3%. So therefore, it also brings the point that even though we see China has placed sanctions on a US firm called Micron, however, whether it will extend it to a very broad scale or basically whether it has the ability to basically ban a lot of this import from other countries, right now, I think the government will still adopt a rather cautious stance. And at the end of the day, even if we look at the example of Micron, it's really about memory chips, which is an area that China is relatively catching up a bit quicker than other companies. And also, there is actually a substitution which is possible from Korean firms such as SK Hynix or Samsung. And therefore, I think it gives the message from the policy point of view that I think tensions are indeed getting tougher. However, whether it will end in a way that with like a barrage of arrows shooting at each other immediately, I also do not think that is that possible, simply because China is too dependent on foreign equipment at the moment. And of course, even though we know that China may not be that advanced in semiconductor, it doesn't mean that foreign firms may not face revenue shock if there is a more broader like tensions between the West and China. And indeed, for the world, I think the biggest change in 2022, which is of course also due to zero COVID, but still I think reflects the impact of the sanction, is that China sees its first decline in equipment purchase within the last decade. So therefore, I think this is something that is really changing within the global supply chain. And indeed, if we look at it in a more detailed way, China was basically forming 29% of total purchase back in 2021, which is the peak of the equipment purchase. But now it has fallen to around 26%. So of course, if there is any restriction either from China or either from the US in selling this equipment, of course, companies will face short-term revenue shock. And we calculated that the US will probably face the biggest shock, because around 25% of the revenue of this chip equipment maker actually go to China, followed by Japan. Europe relatively has a more diversified sales portfolio, so therefore, at least at the moment, it's actually less affected if there is any sanctions being taking place or further escalated. And on the firm level, it's hard to really conclude it in a very detailed way, because each firm may have its own exposure, different type of products, and etc. But I think one point we need to look here is that even though the headline numbers may actually suggest quite a high number in terms of the revenue exposure, but still, if we look at the capacity of foundry in China, we see that if we look at it by location, maybe it forms around 20% or 25% in the world. But if you look at it by headquarters, actually almost half of this capacity are owned by foreign firms. So it means that if they're able to move their capacity away, or if they decide in the future they would like to expand somewhere else, like India, etc., then actually the impact may not be as big as the headline suggested, simply because if the demand is there, someone are going to buy these chips, then they would be able to find their sales channel somewhere else, even though there's some disruption in the supply chain. So, of course, ahead of this type of very tough policy, another question is really what will China do? So if we look at it generally from the more tech process perspective, of course, it's hard to imagine China, being able to produce anything that is lower than 7 nanometers. There's some talk about SMIC able to produce like chips at that level, but still whether it is as advanced as or as cost effective for commercial purposes, I think this is also subject to very big uncertainty. So the most likely scenario is that if China actually is not able to import any equipment from the rest of the world, what it can do is really to build the supply chain, which is at a relatively less advanced level, which is the area that already had around more than 30% of market share. Then we expect to see a flood of overcapacity in this less advanced chips. But of course, it still depends on a lot of different factors. At the end of the day, even though the world has been focusing on the advanced type of chips, and if we look at the less advanced one, actually it's still used in many products that we have nowadays. So therefore, I think there's still a role for China to play in this world. Even if we look at the current policy right now, even though it seems quite tough from the US or from the West perspective, but still it's not really about banning China from producing any type of chips, and it's really about freezing China at the current level in the tech advancement. So therefore, I think generally this decoupling story may actually happen, and there are two possible scenarios. On the one hand, which is the one that we have just discussed, is that China cannot really move up the ladder, and therefore in the mature node space, definitely there's a risk of overcapacity. But the other potential development is that if China at least managed to move up the tech ladder for a certain level, then we may actually see a two separate tech ecosystem. And of course, this looks like it's like the two more extreme scenario that we see, and usually the truth or the most likely case is probably somewhere in between. But of course, I think this is something that the world should look at. So with that in mind, I will pass the floor to Eric to talk about something that is maybe a little bit more longer term, which means that whether China can actually find a way to catch up with the West. And of course, one of the most hottest topic that we have in the past 2 to 3 years because of the development in many sectors is really the automotive chip sector. So Eric, the floor is yours.
Yeah, good morning, good afternoon, depending on where you're watching. My name is Eric Benoit. I'm a tech and data research specialist working for Natixis in London. Gary, you're right. The automotive semiconductor sector is particularly interesting in the context of everything you've just described today, both from a geopolitical and technological point of view. So if you look at the semiconductor market as a whole, smartphones represent about 25% of sales. Personal computing is about another 22%. We have servers and data centers, which is 16%. The automotive segment represents basically 8 to 10% of the market currently. But if you dig a little deeper into how each of those segments are performing, and you look, for instance, at the consumer electronics segment, which includes PC and smartphone, well, it's still struggling quite significantly in 2023. Worldwide PC shipments declined 30% in the first quarter of this year after falling 16% in 2022. Mobile phone shipments are also expected to be under pressure with a 4% drop this year, according to Gartner. So in this general context of macroeconomic uncertainty, consumers simply lack the incentive to purchase new equipment. They are holding on longer to their current equipment. So oversupply remains an issue, and OEMs continue to tap inventories. This is most strongly felt actually in the memory segment, which the WSTS reported was down 56% year on year in February. If you look at the data centers and servers business, well, times are also quite challenging. Intel reported a 39% decline in revenue in the first quarter in their data center division, citing reduced spending from enterprise customers and caution from cloud player, a picture which is, by the way, the same as AWS, where they mentioned during their earnings call that customers of all sizes in all industries continue to look for cost savings and optimizing their cloud spending. They also saw these optimizations continuing into the second quarter, with April revenue growth being 500 basis points lower than what they had in the first quarter. So going forward, investments in artificial intelligence and high performance computing may well be driving a much more positive momentum in the second half of this year. But for now, the automotive segment really looks like it's the only or one of the very rare bright spots in the industry. Car sales, of course, may suffer from macroeconomic headwinds as well. But what's important here is that the semiconductor content is increasing within each vehicle, and it's increasing by up to 3 times on new electric vehicles. Now, if we look at the trends that are actually driving that very positive momentum in the semiconductor, the automotive semiconductor industry, then I think we need to mention at least 2. The first one is electrification and an increased need in power electronics. Power electronics obviously are much more important for electric vehicles and include a number of important components, of which you will find things called inverters, which you probably heard about quite a few times in recent times. These basically transform direct current from the battery into AC current that can be used by the electric motor. It also is able to recuperate kinetic energy to be converted back to the battery in case of regenerative braking. So it's indeed a very important element of the electric vehicle. Then you have things like DC-DC converters that serve as intermediaries between systems of different voltage. You know that if your battery is actually a 400 volt or maybe 800 volts system, then all the rest of the onboard systems typically have a battery work on 12 to 48 volts only. And so these DC-DC converters are needed to power the car safely, reliably, and efficiently. And then, of course, we've got things like onboard charger, which are connecting the batteries to the grid, but increasingly with bidirectional current flow functionalities to facilitate the return of electricity to the home or to the grid whenever needed. Then the second trend that we need to mention is the accelerating vehicle digitization. And one way to really look at this is to look at the proliferation of electronic control units in modern vehicles. These ECUs can be thought of as a box containing sensors, a small chip with its own software to decode the sensor signal, a bunch of electric wiring and actuators to enable the car to perform a specific function. Now, in modern vehicles, you'll find up to 100 of those ECU boxes controlling everything from power steering to braking, propulsion, seats, HVAC, security, infotainment, driverless autonomy, and so on and so forth. Another important element is the connectivity element. People are talking more and more about cars becoming data centers on wheels. Well, the bandwidth requirements are also expected to increase dramatically as more data is being transferred between microprocessors in the car, but also between the car and its direct external environment. Now, current Ethernet speed is about 1 gigabit second in high-end cars, but we know that up to 10 to 25 gigabyte seconds may be needed to analyze, real-time pictures coming from multiple camera at various angles. So all of this is really driving the momentum in the automotive semiconductor segment. Here are some charts that I took from a very interesting BCG presentation that was made at the end of last year. You can see that light vehicle production is indeed expected to increase at a 2.2% rate by the end of this decade annually. Meanwhile, the content in semiconductors is expected to grow at 7% annually over the same period. So all of this illustrating my points very well. Maybe I should quote here the CEO of Intel, Pat Gelsinger, who said a couple of years ago that the digitization of everything will push the share of semiconductors in the total new premium vehicle bill of materials to more than 20% by 2030. 20% of all the materials used to make a modern vehicle will basically correspond to microchips and semiconductors. That is quite impressive. Now, in this environment, obviously, European and American firms have already a very strong positioning. I should add that Japanese companies also play a very important role here. And this across the whole semiconductor product range. If you look at power electronics, that we've just mentioned, and sensors, we've got very important integrated device manufacturers. Infineon is one, STMicro, or in the US we have onsemi and NXP. In terms of sensors, Bosch is another important company. Then, as far as fabless advanced chip designers are concerned, and American firms are probably ahead of the game with companies like NVIDIA, which, as you know, is world #1 for GPUs, microchips. Then we have Qualcomm, which is a connectivity expert, and Mobileye, which is focusing on computer vision for autonomous vehicle. We need to mention as well the fact that in this ecosystem, we have very important American tech giants that are already leading experts in the field. I'm thinking, for instance, of Alphabet, which is already leading in autonomous driving through Waymo, for which it has, by the way, designed a number of TPU chips in partnership with Samsung. And then, of course, Apple has made no secret of its desire to make an Apple car at some point in the future, leveraging its M1 and M2 microchip technology. Finally, one interesting trend that is developing more and more at the moment is that some major manufacturers of vehicles are now working on their own silicon products, either by themselves, and that's a strategy that has been followed by Tesla for a few years now, but also by GM Cruise, or in partnership with semiconductor specialists. I'm thinking about Volkswagen and STM, or Stellantis and Foxconn, for instance. Now, inside of that ecosystem, China certainly isn't without options. Of course, they have their own local champions, but to really understand why this is the case, you need to look a bit further into the technology itself. Automotive semiconductors are still largely involving mature process nodes and technology, from things like basic transistors at the 130 nanometer node to, let's say, more high-performance LIDARs using 28 nanometers, for instance. And a large portion of these semiconductors still require older 200 millimeter wafer equipment to be produced. Now, China is one of the very few countries to have expanded its 200 millimeter capacity in recent years. The vast majority of recent semiconductor capex investments has been in 300 millimeter wafer technology, which of course is needed to process cutting-edge microchip for the most advanced end users, such as artificial intelligence, high-performance computing, and connectivity. Now, this leads potentially to a situation of 200 millimeter wafer undercapacity outside of China, which could be exacerbated in the future by the fact that switching from 200 millimeters to 300 millimeters actually takes a lot of time and money, and that several other industries are competing for the same sort of components. I'm thinking, for instance, about the renewable energy or Industry 4.0 sector. According to the Semi-Trade Association, the global 200 millimeter throughput will only grow in the low single digits through 2026, which we believe is unlikely to meet demand, and which could obviously strengthen China's position in the global automotive semiconductor supply chain going forward. Here's a table quickly of some of the most recent fab expansion programs at major global foundries and IDMs, and you will see right in the middle of that table, in the middle column, that the type of wafer equipment is overwhelmingly 300 millimeters, and we're talking here about hundreds of billions of dollars being invested in this 300 millimeter equipment. So another interesting element where China, I believe, is going to be doing relatively well concerns what we call the wide bandgap materials. Now, wide bandgap materials are strategic for the electric vehicle ecosystem. Power electronics manufacturers are increasingly focused on them, things like silicon carbide or gallium nitride. I'm sure you've heard of those two if you follow the sector, and manufacturers need them to produce more efficient semiconductors capable of operating at higher voltage, higher temperature, and higher switching frequencies. Now, this is extremely important because one important element of the electric vehicle value chain is the ability to switch to higher voltages in terms of batteries, because this can reduce charging time by 50% for comparable battery size and allow manufacturers to use smaller, lighter motors and then reduce chassis weight and, of course, braking power, etc., and therefore increase driving range. Increasing driving range really is a very important element of accelerating adoption of electric vehicles in the world. And silicon carbide also have direct applications in things like LiDAR technologies and onboard chargers. So they're really very important. Most of these new components are designed to be printed on 150 or 200 millimeter wafers again. So as EV continues to experience strong commercial momentum, the supply of these components may prove problematic in the absence of additional capacity. Now, if you look at what's happening around these wide bandgap materials in the world, there's a lot of strategic M&A ongoing. You have here on screen a list of recent transactions. In March 23, for your information, Infineon finalized the acquisition of a company called GaN Systems in Canada, a global leader in the development of GaN-based solutions for power conversion, and they paid $830 million in the process for a company which I believe is generating in the low double-digit type of revenue. So clearly, valuations are extremely inflated in that space, but that's a reflection of how important the ecosystem is for the semiconductor industry right now. And well, China is actually investing quite heavily there as well. A quick look this morning at the CB Insights database, for instance, typing the word silicon carbide and gallium nitride, reveals that China is concentrating more than 80% of all equity funding deals in that space since 2018. If you look at what's happened this year, in Feb 2023, for instance, TYSIC, a company in China of SiC epitaxial wafers, raised $176 million from a group of domestic investors, including China Merchants Capital and BYD. So again, a very dynamic and very active sector for China at the moment. If you combine China's growing interest in wide bandgap materials and increasing capacity in 200mm wafers equipment, to its almost supremacy in batteries and rare earth materials, you suddenly start to understand how they are slowly but surely tightening their grip on the global EV ecosystem right now. I should add that China also controls a very large part of the semiconductor assembly and testing market, which is basically the back end of the supply chain, and through that can strengthen its position in the ecosystem even further. So what about the longer term? In the longer term, things could be a little different because architectures are changing, vehicle architectures are changing. This is a slow process. By 2030, industry experts believe that vehicles will have transitioned to fully software-defined architecture, which basically means that you'll probably see a lot of cars with fewer logic microchips, but these microchips will be much more sophisticated and organized in what people call a zonal architecture, i.e. if you look at the little car here on screen, you'll see some zonal controllers in various regions of the car controlling all the local functions of the car, and then communicating through Ethernet link with a central computer, which will basically be in charge of supervising the interaction of the vehicles with the outside world, but also ensuring its safety, etc., etc. Well, these controllers, again, are likely to be much more sophisticated. They are likely to rely on 300mm cutting-edge processes below the 7nm node. And in that context, advanced chip manufacturers in America seem to have the upper hand. It might become much more difficult for China to actually equip their next generation of vehicle with cutting-edge controllers for L4 and L5 autonomy. As an example of this growing American influence, I could mention, for instance, Qualcomm, which in September 22 claimed that its automotive backlog had reached $30 billion through its Snapdragon digital chassis offering. And they outlined plans to grow their automotive revenues from 1.3 billion today to 9 billion by 2031. So they're clearly seeing a lot of upside potential there. For NVIDIA, their competitor, they also declared an impressive pipeline of $14 billion of design wins for the next 6 years of their drive Orin technology. So things are looking pretty bright for these companies. What will China do then? Again, I think they're not completely out of options here. Well, first of all, in terms of equipment, theoretically, the DUV machines that China already owns can be reconfigured to work at the 7nm process node. So yield may not be as good, but certainly it would be better than nothing. Some industry experts have also claimed that China may be able to develop their own DUV technology within 1 or 2 years. Personally, I think this is certainly quite optimistic, but you can never say never, and certainly this is something to keep on the radar. In my opinion, the extreme ultraviolet equipment will remain out of reach for quite some time. I mean, this is an equipment that has taken ASML more than 30 years to master, and it's likely that China would find it very difficult to copy given the complexity of those machines. Then China might actually start investing a lot more in new microchips architectures. It will likely invest, for instance, in 2.5 and 3D chiplet architecture. Here, the idea is to take mature microchips and basically stack them on top of each other. The difficulty being to make sure that they are aligned properly and that the link between those layers work properly. It was reported already that China is making good progress in that space, in particular in memory chips. So again, something that is important to keep in mind. And China will likely seek to emancipate itself from the dominance of the x86 and ARM architecture through an increased participation and investment into the open source RISC-V format, of which you may have heard already. This is to some extent starting already to happen with companies like Baidu and Alibaba, investing specifically in startup companies in the RISC-V ecosystem to be able to produce their own microchip without having to pay license fees and things like that. So that's another interesting ongoing and clearly developing element to keep in mind. Will we ever reach L5 autonomy anyway? Industry experts believe that L5 autonomy may become available by the end of this decade. Again, this might be optimistic because although AI and microchip technology is making a lot of progress, automotive grade semiconductor presents a lot of additional challenges. They must be resistant to vibration in particular. They must be resistant to dust, to water, to high temperatures when they are close to the engine. And they must be able to operate over much longer life cycles than with other consumer products, i.e. 10 to 15 years in the case of private vehicles, which is much longer than the 3 to 5 years of a laptop, or even 1 to 2 years for a smartphone. Cost will also be an issue, obviously, to give you an idea of how much these sophisticated, advanced microchip may cost in a car. The price of an A100 NVIDIA microchip right now is close to $10,000. If you need a couple of these in your car, well, suddenly you end up with a vehicle that nobody can really afford. So this will have to be kept under control. Then there are additional side issues which will prevent the technology from being deployed quickly. We could talk about cybersecurity. We could talk also about ethics or insurance, of course. So if L5 autonomy takes longer than expected to be deployed, then China also had more time to navigate the current crisis and to develop and build its own supply chain and ecosystem for semiconductors. If you would like to dig further into this automotive semiconductor story, I strongly recommend you downloading our recent report called Automotive Semiconductors Life in the Fast Lane. It's available on the Natixis research website, or you can get in touch with me or Gary, and we'll be able to send you a copy. That's it for me, Gary.
Yes, sure. So I guess we can just conclude the presentation quickly, and then we can go into Q&A. So I think the quick conclusion is that semiconductor is getting increasingly important, and then from the chip ban perspective, that we see there are more restrictions that may put the world into two scenarios, and then also like from the automobile semiconductor, it is indeed quite a key aspect. So hi Alicia, I see that you are here, so I'm sure you want to add more perspective from the geopolitical perspective.
Thank you, Gary. I hope you can hear me well. If not, I will turn off the video. Is that okay?
Yeah.
Yeah. Okay, thank you. So I'm going to just go through the questions for the sake of time. We only have a few minutes left. I've seen a few questions on the chat. One, I think, Gregor, I saw your question regards, I'm not in Taipei, happy to know you're around. I'm here in Europe, and it's been quite a ride, this call. But the good thing is that we've gotten very, very good questions on the geopolitics of it all. And I think what I'd like to say on starting with yours, and maybe Gary can add, it's really, I mean, you're linking here the RMB internationalization to this topic or beyond. You're mentioning the petro yuan, so basically petrochemical industry, and the silicon yuan as an additional factor. I think your point, I mean, the way, and we're studying this issue of the RMB internationalization, as a push for China, for China's trade. So it's mostly trade settlements, but it's mostly in areas where China dominates. So, you know, whether it's as a monopsony or close to that, whether it's critical materials for refining, or, you know, all of that is starting to be denominated in renminbi. The best example is actually Brazil, for which critical materials imports were 0.5 billion only right before the pandemic, and now it's 6 billion only in that, and it's growing massively. And that is, I mean, I'm talking about the billions in RMB. So, you know, and this is why Brazil, as you know, has decided to open an RMB center, settlement center, during Lula's visit to Beijing. So it is starting, but I don't think the silicon RMB, as you say, will be the best thing or the most immediate thing, because that's not where China has its main trading power. Even if China needs to make it easier to import what it's needed, rather than impose RMB settlements. So that would be my call on that. On the other questions, what I would like to say is that what if the sanctions don't work? And I think what we've learned both from Gary and Eric is that there's no such thing as a binary answer to that question. They may work, you know, at the very at the highest end. They may work for some kind of lithography machines. That's another question we had, but they may not work elsewhere, and then China would continue to reduce that gap. In essence, that's what we mean. But I want to go beyond semiconductors for what if, and that is the type of retaliation that I'm expecting from the US. I'm here at a conference exactly on this topic in Paris, and what seems to me is that the trend is to basically link sanctions on Russia or related to Russia hitting China. So basically going beyond semiconductors or entity lists, or and basically focusing on companies selling dual or fusion technology to Russia, especially Chinese companies, some of which Hong Kong based. And of course, the key question is how many other countries other than the US, no matter the promise at the G7, will be able to follow. And also the big question, we had news today on Samsung taking over on Micron's exit. So in other words, will the US manage to get everybody on board, both on Chinese direct sanctions on semiconductors, or at least not sanctions, but export controls, and sanctions on China on this field, on Russia for Chinese companies serving Russia. So I think as the US pushes in this additional direction, it all boils down to how much other countries will follow, to better understand how much the US can do. So rather than go further into semiconductors, what I'm arguing is that it's going to go around it, yeah, dual fusion more generally, and bringing everybody on board at the G7 plus South Korea, in my view. This is obviously the latest official visit to the US is very much hinting towards that direction. I think I'm going to leave the floor. China's retaliatory measures. This is quite important. As you know, we had Qinggang visiting Europe, and you know, it was a very threatening visit, especially in Germany. I think China's retaliation is not going to be in this sector. It's going to be everywhere else but this sector, because it doesn't make sense to retaliate in this sector. And I think companies that may suffer are those with the largest market share. I mean, European companies with the largest market share in China. So I think it's going to be bigger in terms of impact, but not in this sector. And therefore very painful for any country that wants to follow the US, either in sanctions related to Russia. So Chinese companies, again, selling fusion technology or dual technology, but not so much semiconductors. That's my take on China's way to retaliate. That's all. Maybe Gary, you want to add something on the silicon yuan, and maybe Eric can add more to the rest.
Sure. I think I'll just add one more point to both the retaliation and also the silicon yuan. So for this retaliation measures, I think if we look at some of the examples that China has done before, and definitely in line with what Alicia said, is that usually it's quite targeted. It's into the area that, well, China may not need so much of the other economy. For example, if you look at Australia, the measures are really on the products that maybe China can find substitute somewhere else. And even if we look at other markets like Taiwan, like there's no sanction on chips so far. We are only talking about things like fruit and different type of agricultural products that China can actually find it elsewhere. So I think it's really like an approach that China is also trying to protect itself. It doesn't want to give something that is too costly, but it can be dangerous for some of the other sectors, especially for those that China is climbing up quite aggressively. And one of those I can imagine, especially from the angle from Europe, is really electric vehicles, batteries, and all sorts of this new industry that China may actually has a bigger hand in terms of the market share. And talking about the silicon yuan, I also feel it's quite hard for China to implement that, because I think one of the benefit of like having like a third kind of currency settlement beyond the US dollar is really you need like a more balance, like a balance of payment that you need usage for this sort of currency. But if we're talking about like the chip sector, I think it's hard to see that balanced trade so far between China and versus other countries. So I feel basically it's a bit hard to push, because China has been trying hard to push for something that it is more balanced, which more like purchasing power, like iron ore, etc. But still, it's quite hard. So basically, silicon will be even harder than that. So Eric, I guess you would want to take the question on the progress or the potential of China producing the DUV machines.
Right. Okay. So yeah, the question is, how easy would it be for China to develop its own DUV lithography technology? Okay, it's not super easy, but in the case of DUV, I believe, that it's perfectly possible that China will develop their own technology. In fact, they have already reportedly developed DUV technologies that is, I would say, less advanced and able to process nodes, relatively mature nodes around the 130 nanometer process. It would probably not take 1 or 2 years, like some people have mentioned, but within 5 years, I think this is perfectly a credible assumption to make. What I think will be a lot more difficult, really, for China is to go into the EUV space, which is, as you know, necessary for cutting-edge microchips. I mean, if you look at these kind of machines, they are certainly some of the most insanely complex machines that have ever been made on Earth. You have to look at what's inside, and you'll find that to produce, they work at a 13 nanometer wavelength, which is basically the extreme ultraviolet spectrum. And to produce that light, they basically use a very small thin particle that travels in a vacuum at 230 miles per hour and get basically shot by a bunch of lasers 50,000 times per second. And then they're using super pure optic and mirror components that are so pure that if they were the size of Germany, I've read, the biggest impurity would be the size of 1/10 of a millimeter. So it gives you an idea of how crazily complex these machines are. And certainly it's taken 30 years for ASML to develop the technology. And China will obviously have to spend quite a lot of time before they can reproduce the magic. So yeah, for DUV, I think it's probably a matter of 4 to 5 years. And for EUV, we're talking about decades.
Maybe just, I see a couple of questions. I just want to add something that many people ask. this question of whether China will retaliate with rare earth, and the sense what I've been hearing at the seminar, closer seminar, there's quite a few U.S. think tanks, analyzing what happened with Japan in 2010 and whether that could be replicable. And I think the very interesting point that was made is that because of the very, very, of course, IRA, but also the very strong measures on the table for de-risking from the US side and not so much our side in Europe, it seems that China would find it counterproductive to retaliate on rare earth, because it's only going to accelerate the deals that are on the table, potential deals for refining of rare earth extracted outside of China. And I think that this is interesting because I think everybody's now watching, and I think for China is indeed a problem if they cannot have as much leverage as they have now. So I wanted to add that to the conversation. And the next Micron, who can be that? I think the point we're trying to make here, all of us, is that it might not be one more Micron, because if you keep on doing that, if now Samsung is saying, I'm coming in to substitute the Micron, you'll end up without any of the major companies coming in. And I think that's why China has to be very careful in retaliating in this sector. And if you see what China has done since Micron, everything is like, whether it's consultancy companies or it's not related to the sector as such. And I think the reason is it's just too dangerous for China. So basically that's our take here. So the last question, will the competitiveness of EU chip makers erode if China moves much quicker in the EV sector? Well, the problem is China has already moved very quickly. So I think the question, in a way, I would put it this way: we've already lost a lot of competitiveness. And the question is, how can we recoup that, what we've lost? And I think the answer there, of course, as you all know, is how many more policy measures will the Commission announce beyond, CRM and net zero? Basically, how to regain that competitiveness for EU, not only chip makers, but automakers, EV makers, as soon as possible. And is there anything that can be done at the G7 level beyond the general announcement that has been made? And what I hear is that there's going to be in the EU, in the US-EU Trade and Technology Council, a new, basically, working group created just to discuss how to cooperate on this. So my sense is that the answer is going to be more like joint answer than only IRA or CRM in Europe and so on and so forth. That's, I think, where the G7 is pushing us. And that's all from my side.
Do we have any other question?
Maybe I give the word 1 minute each to just wrap up, Gary and Eric.
Mm-hmm.
Sure. I think maybe I'll just sum up it quickly of the messages that we're trying to give. So I think there are winners and losers in this type of geopolitical tensions. And of course, for China, in the long run, maybe it can it will be able to chase the global tech curve. But at least in the short run, I still think there's quite severe risk, even though there's a government support if the sanctions continue. And for the rest of the world, I think because of this changing dynamics, and for the less advanced chip makers, definitely there's a risk of a direct competition with China as China expanded production. But for the most advanced one, it also means they probably be less affected if the world actually continues to have this strong demand. And those in the middle, which is kind of between 45 to 16, really depends on where China managed to achieve. If China is really stuck at 45, then they will really be the only ones that like the world can buy chips from them. So maybe it may not lose too much, even though it loses the Chinese market in a way or the other. So yeah, I guess the impact can be quite diverse. So I guess I will pause here.
Eric.
Yeah, so my side, I think the interesting thing to remember is that in this ecosystem of automotive semiconductors, driven by electrification and digitization of vehicles, even though European and American firms certainly have a strong positioning at the moment, China is definitely not out of options and certainly can grow to become a much bigger player in that space. Keep in mind that the automotive semiconductor is about 8 to 10% of semiconductor market right now, but given how quickly this is growing, this is likely to become much bigger over the next few years. Keep in mind as well that everything we've just mentioned about electrification of vehicles can also apply to other industries. And I'm thinking Industry 4.0, I'm thinking robotics, I'm thinking, renewable energy. So there are still a lot of things from a technological point of view that China can do to remain an important player on the international scene.
That's wonderful. I think we're done for the day. I really thank you for all of the questions. Sorry for the technical problems. I think it went very well. We learned a lot from Eric and Gary, and I just want to thank everybody for being here. Thanks so much.
Thank you, guys.
Thanks very much.